Hello everyone, this is Daniel, reminding you that we are making videos for traders, people who are beginning to trade in the financial markets, especially forex. And today we will be talking about technical analysis. Uh, there are important things that we are going to be talking about. Number one is we are going to be discussing about trends, what are trends and how to recognize them. And then number two, we're going to be talking about analyzing the chart using figures. The market can form different diagrams, and this is what we will be talking about. Now, there is something we need to know. In financial markets, price is always moving. It's either going upwards, downwards, or um, sideways. There is no time you will find that the market not moving. Even though in this time when, like in weekends, this is market that works 24 hours in 5 days. But even in the weekends, you will wake up and find that the market was moving even though the charts were not actually working. Let's talk about when the price is going upward, what we call uptrend. This is when the price is characterized by higher highs and lower highs. You see from this place, the price will go from here and goes here and then comes down here and it goes up here and it will keep going like this. And when you see the overall direction, you will find it's going up. That's why we say there is a higher high, now a higher low. And then from a higher low, we go a higher high, then we go on a higher low. Then it keeps going like this until it will reach to the moment where it will turn to now downtrend. Now the downtrend is characterized by lower low and lower high. So now you see these two lines here, like we saw it before. This is a support line, which means always price is likely to come and hit this position and revert. And when it hits this line called the resistance line, the price is likely to come once it hits this line and it's going to reverse and go down again, and it keeps doing this until the trend is done. Now that is when a price is going sideways. It will not be just a simple line. It will be oscillations. It goes up and down, goes up and down. But when you try to find the overview, you find that the price was going on a straight line. That's why we have now this will work as a support line, and this will be as resistance line. Now what happens is the price will move from point 1 to point 2, and it will reverse to from point 2 to point 3, and it will keep doing this until the price will break one of the lines. Now, how to trade on uptrend? As we said that a price is going from lower to higher level, then from higher level to lower level, and then go to higher level, then revert to lower level. But now the distance from here, you see the distance here is longer than the distance from up this place, which overall makes a trend to be an uptrend. Now it is simple. When the price has gone to the support line, now this is when there is an opportunity to buy. Reminding you that this is a basic class. There are different things which play for us to make a decision to say that we are going to buy. But generally, this is how it looks. When the price is down here and we have an uptrend, we buy, and we sell when it has got to resistance line. Now on the downtrend, it's the same thing, but now in the reversed way. The price is down here and it goes to point 1. Now because it's a downtrend, we start from point 1. If the price is here, let's say from point 2, we have an opportunity to buy, and we take profit, or we close our order or our position when it hits on point 4. Then we wait, it goes up to the resistance line, and then we sell again. That's the basic information of this. I repeat again, there are a lot of other things that play in our decision making. We just don't make a decision because the price has hit the other resistance line, or it has hit the support line. Now on a flat, it's the same thing. From 1.1 to point 2, all the same as from point 3 to point 4. Now we have opportunities to either buy or sell from each line, because now the line is a flat. We are going from position 1, from 1 to 2 we have an opportunity to buy, and when we are on a position 2 we have an opportunity to sell, which is what we see right here, from this point to this point. Now, technical analysis using figures. This will take us to a second level, where now we have what we call continuation of movement and reversal. There is a triangle figure. What you see here is a support level, and this is a resistance level. This line, a line between point 1 to point 2, is bigger than the line, is longer than line between 5 and this blue point here. Now there is a time when it will happen like this, and when you can trace a line and trace another line, you will see a shape like this, which is a triangle. And how now do we make a trading decision? When this price has broken this line, now it is showing us that this resistance line has failed to the extent that the price could even break it. Now we wait, and if this price come back again and hit this line and reverse, now it shows that actually this which was a resistant line, it has become a support line, which means now the price is likely to go beyond this resistant line we had before, which has now become a support line, because now price is likely to come back and hit this position and it goes up again. Now when we have got this opportunity, this is where we find a buying opportunity. It comes back here and it shows there is a signal that now the price is likely to keep going beyond this line, and we buy. Now peanut. On a peanut, we have what we call poles. It's like the price came this way up here, then when it came and reversed, it stopped here, and it did something like we saw on a triangle, and it broke, and it came back and hit the resistance line, and it showed a signal here that now it's no longer going to keep obeying this movement that it was doing between resistance and support. And now what happens is that we have this opportunity of buying. Now where, if yes, it's good that we have got an opportunity to buy, and where do we expect to take our profit? We come here and we measure the distance, like how many points between the beginning of this line, it means it's coming from here up to the resistance. We measure exactly the same distance and we make it a profit. So now we will take a profit when the price has got the same distance between the one we had here on the pole. Now we have another figure, a flag. You see, we have a pole here, which means the price came this way and it hit the resistance, and when it came back, it stopped from the support, which started creating here. Now it went between here. You see, it's rectangular, and the reason why they call it a flag is like it's like a flag the pole of the flag, and then yeah, like you see here. Now, when it hits here and breaks, there is an opportunity that now it will come here and revert. When it come to this point and revert, it means that now this is no longer resistance, but it has become a support. This is where we have now an opportunity to buy. So now we can measure how amount of points to gain by counting points between the place where this pole started to the resistance. You start buying here, and aggressive traders, they can also come and take a position from here. And we will in the future discuss more about how to make these trading decisions using different tools like indicators and more in the future videos. Now, head, shoulders. These are figures which can be formed as the price hit different levels. Now they call it head and shoulders because, for example, the price came here and it came here to what we call the neck. Now it went that high, and after it got to this position which is called head, now it went back to the line. You see, it's obeying this line. Now, instead of doing the same to make the same level as a head, now it created another another shoulder here. So this shows one thing. Number one is like the power of traders. Let's say we were selling, the power of people who are selling has reduced. That's why now they have not been able to make the same. They have not been able to achieve this level. Now when now we see that the neckline is actually broken, now it shows actually the strength is reduced, and now we have an opportunity to buy. Now, how do we measure the position to take the profit value from the top of the head to the neckline? Now, you see this line from here up here. You can measure how many points are in here. Now it's going to be your target of a profit. Now that is what we call double bottom. Double bottom is when now we have remember we had in a previous figure, we had in the previous chart we had the head and shoulder. Now it's not a head and shoulder, it's when we have two levels, like the price came down here, and let's say if it hit 50 points and it came to the neckline, and it came down here again, and it around the same number of points, let's say 51, 49, 50. It shows that now the strength are exactly the same. When it breaks and start reverting, now here's what we call an opportunity to take an action, to trade. Now the profit will be equal to the height, as you measure how many points are in between this line and last point, the bottom height. Now when we buy from here, the price will exactly be equal to these points. This is how you can predict how much you're going to make in terms of points. Now, this is it for today, and reminding you that we are making these videos. We welcome you to subscribe and click notification button, because we are going to be releasing more videos. If it looked just like this, everybody would be making money from the market, which means that we need to go deeper and deeper. So the future videos will be focusing on what influence our decision making in trading. Have a nice day. This is Daniel.